As a saver, you want to own gold. As an investor, you want to own the biggest and the best gold equities in the world. They are reasonably cheap relative to the price of gold. You don't invest across the waterfront in the gold stocks. You buy the biggest and the best gold stocks that you can as an investor. If you are willing to do the work and take the risk to be a speculator, then you come into the intermediate gold stocks and the junior gold stocks. But understand, you have to contend with volatility and you have to contend with risk. And importantly, you have to do the work to put your portfolio in the context of that old spaghetti Western, the good, the bad, and the ugly. So I really think the answer to your question depends on who you are as an investor, what your appetite for risk is, what your appetite for volatility is, and what your appetite for work is. Sorry for that long-winded answer, but it's a failing that I see in thousands of people who come to me for portfolio grading. I think we will see an all-time nominal high. Remember, when you say an all-time high, when you're talking about 2,000 US dollars, you are talking about a currency that's lost 96% of its purchasing power in 100 years. So you have to talk about nominal values and real values. If we were going to see an all-time high in gold, you need to remember that the dollar has lost a substantial amount of its purchasing power. So I suspect that an all-time high in gold would need to see the gold price in the $3,800, with a $3,800 handle in nominal terms.
How important is the $2,000 price level for gold?
I think psychologically it's important, but remember that increasingly gold is traded and denominated in a whole bunch of currencies around the world. I wonder, as an example, as a Canadian, why you would care as much about the US dollar quote than the Canadian dollar quote, where it eclipsed $2,000 some time ago. I think that $2,000, if it proves to be a support level, may be an important psychological support level in the United States. But I don't think that psychological support is as important as the arithmetic around owning gold relative to other savings and investment instruments, which I think is much more important.
What is your preferred way to get exposure to the gold market?
I think that depends on who you are. For an old guy like myself, physical gold represents an insurance policy. Physical gold has stood people well in times when there were stresses on the economy and there were problems with regards to other savings and investment instruments. Let's do the arithmetic around that fear one more time. As an American, well, frankly, as a citizen in any country of the world, the premier security in the world, the premier savings instrument around the world, the one that other instruments are ultimately priced off of, is the US 10-year Treasury. People around the world don't like to have that, but it has the disadvantage of being true. So let's look at the arithmetic around the US 10-year Treasury, or let's re-look at it. You give the US government money to use for 10 years, and they pay you 3.4%, 340 basis points, in a currency that the Congressional Budget Office, not some cranky old libertarian named Rick Rule, the Congressional Budget Office suggests is depreciating in terms of utility by 7% a year. In other words, the US government solemnly promises to reduce your purchasing power by 3.5% a year for 10 years. We've described that on your show before as return-free risk. Gold is competing with return-free risk. So I personally have transferred a relatively large amount of liquidity out of US short-term treasuries and other deposit instruments into physical gold. Not really in the hope of making money, but rather in the hope of not losing purchasing power.
Central banks bought 400 tons in Q3 last year. These are numbers that we haven't seen since the 80s. Obviously, there's theories that Russia and China are the big buyers here. What are your thoughts on the continuous buying of gold by central banks?
Well, personally, I think it's a bad thing in the sense that I'm anti-government. And so any government that does anything that's smart, that's advantageous, I think is a bad thing because I'd like to see them all perish in penury. But moving on beyond personal prejudice, I think that we've left them no choice, we meaning the United States. If we sell them a US 10-year treasury, we pay them 340 basis points in a currency that we acknowledge we're debasing at 700 basis points a year. In other words, we guarantee the Chinese and the Russians a loss in purchasing power. We absolutely, positively guarantee that they will be able to buy less stuff with their savings than would otherwise be the case. Now, for once in their lives, they believe us, and for good reason. They also don't trust each other. When you look at these central banks, if they are unwilling to hold US treasuries, why on earth would they hold Russian treasuries? Why would they hold Argentine treasuries after 8 defaults in 100 years? We have left them no choice but to buy gold. The third thing, of course, is that foreign central banks have come to understand that various currency blocks are competing to weaponize their currency. While they may or may not be able to transact in US dollar, depending on the whim of the US government, they can always transact in gold. So I think it's fair to say that there's a decrease in trust around the world. Gold has always done well when there's a decrease in trust. It's a financial asset that isn't simultaneously a liability. It isn't a promise to pay like a bond. It's payment in and of itself. And I think the increasing appetite for gold among central banks is simply a reflection of the changing economic times that all of us are living in. I think in the longer term, it's a big deal. I think in the very near term, there is no currency or block of currencies in the world that is as liquid and as transparent as the US dollar. I remember many years ago when it was suggested that the euro might replace the US dollar. And I remember very well my friend Doug Casey saying the dollar is an I owe you nothing. The euro is a who owes you nothing. Imagine a basket of currencies that is promulgated by one fairly strong economy, which is to say China, and a coalition of basket cases. Imagine a common currency that includes such fiscal stalwarts as Argentina and South Africa. This is a true non-starter. Now, the United States needs to be very cautious of further debasement of the US currency. I would suggest to you, Cassandra, that the enemy of the US dollar is not China, it's not Russia, it's not Saudi Arabia, it's not Iran, it's the US Congress. The idea that you debase the debt instruments of the US dollar, which is to say the financial products, by artificially low interest rates and by poor credit quality, and then you further debase the currency by weaponizing the SWIFT banking system and by weaponizing transactions in US dollars, using the dollar to export US values and US political power over other countries. This is insanity. It's true insanity. The United States enjoys what de Gaulle called the exorbitant privilege of being able to have the world's currency, stimulating demand in other countries, artificial demand for US dollars because their debt and their trade were denominated in dollars. This is, in fact, an exorbitant privilege. Every American benefits to the detriment of people all around the rest of the world this privilege, which is the US dollar as a reserve currency. And the US Congress and the US executive is doing their very best for near-term political purposes to deprive American citizens of this exorbitant privilege. Truly insane. I think we'll see a more multipolar world. I think, too, that you will see bilateral trade in currencies other than the US dollar, particularly the Chinese yuan. But the yuan is a currency that is the reflection of an extremely insular economy. there is no transparency into Chinese capital markets, and there's only limited convertibility.